There is a rule almost every trader repeats. Gold goes up when real yields go down. I am going to show you 7 years of real data where that rule worked almost perfectly and then completely broke. And by the end, you will see why the breaking is more important lesson because it's true of every relationship in markets. Start with the words. A bond pays you a yield, but if inflation is eating your money at the same time, what you actually earn is the yield minus inflation. That's the real yield, your return after inflation. If a bond pays you 4% and inflation is 3%, your real yield is about 1%. If inflation were 5%, your real yield would be negative. You are losing purchasing power even while you are earning interest. Now, gold. Here is gold's big weakness. It pays you nothing, no interest, no dividend. So, the real cost of holding gold is the real yield you give up by not holding a bond instead. When real yields are high, that cost is painful. Why hold a lump of metal when a bond yield pays you the solid real return? But when real yields fall, especially below zero, that cost disappears. Gold's weakness stops mattering and money rotates in. That's the whole logic behind gold up when real yields down. It's not magic, it's the opportunity's cost. Let me show you the real thing. This is one chart, two lines. The green line is the US 10-year real yield. Actual percentage is on the left. The candles are gold in dollars on the right. One detail if you build this yourself, plot the real yield as an actual level, not percent change. Because real yield goes negative and percent change of a negative number is nonsense. Steps are in the description. Now watch it in the 3 acts. Act 1, 2020, COVID hits. Central banks slash rates and the green line, the real yield, collapses below zero. Look what gold does. It rips to the record highs. Real yields down, gold up. Textbook. Act 2, 2022. The opposite. Inflation is raging. The Fed hikes hard and the real yields rocket from minus 1% to plus 2. And gold, it stalls. Same rule, mirror image, 2 for 2. Now Act 3. From 2023 to today, real yields stay high. The green line never comes back down. By the old rule, gold should be stuck. Instead, gold nearly triples, new record after new record, while real yield sits at the level in Act 1 and 2 would have crushed it. Right? So why did it break? Not because the logic was wrong, because a bigger force showed up. Central banks, not traders. Central banks started buying gold by the ton to diversify away from the dollar. Add de-dollarization and geopolitics on top. That structural demand simply overwhelmed the opportunity cost math. When a new stronger driver enters the regime, it can overpower the old relationship completely. So, is the rule wrong? No. Real yields are still the cleanest single lens on gold. You saw it work twice. But here is the part most people miss. It's a tendency, not a law. Every relationship in market works until a stronger force rewrites the regime. The trader who memorized gold up when the yields down got run over from 2023 on. The trader who understands why it works could see a new driver take over and adapt. That's the actual skill. Quick recap. Real yield is your return after inflation. Gold pays nothing, so it hates real yields and loves low ones, usually. That held in 2020 and 2022 and broke from 2023 as central banks buying took over. Tendency, not a law. If this way of thinking, why things move, not what to buy, is what's being missing from your trading, that's the whole reason this channel exists. There is a free lesson linked below to start. Subscribe if you want markets explained honestly. No signals, no tips, just how it actually works. One last thing. You have probably heard it. 95% of traders lose money. That number is why this channel exists. We are here to change it by teaching the craft to 10,000 traders one honest lesson at a time. If that's a mission you believe in, the best thing you can do is share with the one person who's still chasing tips. Free lessons are at themarketstory.com. No signals, no tips, just the craft. See you in the next one.